over 75 years of combined work experience in the financial industry. Ifan was founded with a vision to establish itself as a reliable partner for business growth and higher profitability that empowers financial advisors in India with a comprehensive range of investment products and services by being a one-point contact for all financial product and asset classes. Ifan offers a web-based B2B financial products and services platform where financial advisors and distributors can gain access to services like basket of products, research, financial planning, e-Nivesh, online wrap solutions, portfolio monitoring, CRM, commission management, training, financial planning, and trailer monitoring. It serves as an efficient, low-cost, plug-and-play model for advisors to scale up their business in a standardized manner. Ifan also offers professional back-office services for product research, marketing, and legal and compliance. Ifan provides efficient online access to its clients, enabling them to monitor all investments under one roof. Manufacturers can access Ifan's widespread professional associate network across the country. The greatest benefit that an associate of Ifan would hold is with Ifan's assistance, he would be in a position to grow his business in quality and quantity. Ifan's research-based B2B platform offers various asset classes, covering mutual funds, debt, equity, real estate, home loan, LAP, and LAS to over 50,000 clients through a 1,000 plus dedicated associates network in 87 cities in India. The company has been ranked in top 50 distributors in India amongst over 90,000 distributors in mutual fund. Ifan also ranks amongst the top 5 distributors in company fixed deposit mobilization. Being a large institute and aggregator has an advantage to negotiate with financial product providers and thus offer higher short-term and long revenue to its associates. This also helps associates sustain their skilled manpower, thereby helping them increase their client base. As an associate starts increasing his network, he will have the potential to earn higher revenues across product classes. Ifan partners include a company that enables IFAs to gain greater efficiency and the ability to tap into economies of scale and at the same time help them deliver better service performance for their clients without increasing the cost. Ifan has taken the initiative to lead the change and facilitate a paradigm shift from the current sales-based advice to a more effective, advice-based sales model in the financial services sector. Ifan.
देख कुछ होता है तो फोन कर। हाँ विकास, 1 लाख की जरूरत है। शर्मा, गुप्ता, सेन।
क्या वर्मा, धंधा जोरों पर है? बड़े बड़े नंबर लिख रहा है, 0 पर 0 लगा रहा है।
कहाँ का धंधा? 2 बड़े पेमेंट आने थे, एंड टाइम पर रुक गए। और जो फ्लैट मैंने बुक किया था, इस महीने उसकी भी पेमेंट आ गई। बेटे की फीस और इस बार पिताजी ने भी थोड़े पैसे मंगाए हैं। महीने के जो रेगुलर खर्चे होते हैं, दूध वाला, बाई, पेट्रोल, क्रेडिट कार्ड वगैरह वगैरह, वो तो वैसे ही हैं।
ये खर्चे तो होते ही हैं यार, तूने ऐसी हालत क्यों बनाई हुई है?
सेविंग अकाउंट पूरा खाली कर देने के बाद भी ये सारे खर्चे पूरे नहीं हो पा रहे, तो पेमेंट रुक गए, वो अलग।
बाकी पैसे कहां गए? सब उड़ा दिए?
अरे नहीं, इन्वेस्ट किए हुए हैं, लेकिन इक्विटी फंड अच्छा रिस्पॉन्स कर रहे हैं। कुछ लॉक इन पीरियड में है। ज्वेलरी कैसे बेच दूं? एफडी तोड़ूं या बॉन्ड करूं तो क्या करूं? अब तुरंत पैसे की जरूरत है।
ओह, या तो पैसा सेविंग में या इन्वेस्टेड, लिक्विड में कुछ नहीं है।
अरे सेविंग अकाउंट लिक्विड ही तो है।
मतलब लिक्विड फंड ठीक जिंदगी के ऐसे मोड़ों के लिए जहां अभी तू खड़ा है।
मतलब कि क्या?
लिक्विड फंड म्यूचुअल फंड की एक कैटेगरी है।
और एंट्री एंड एग्जिट लोड?
लिक्विड फंड में जनरली कोई एंट्री एग्जिट लोड नहीं होता, तो इसमें एंट्री एंड एग्जिट लोड का नो प्रॉब्लम।
तो फिर
लिक्विड फंड का पैसा गवर्नमेंट सिक्योरिटीज जैसे कि ट्रेजरी बिल्स और दूसरी शॉर्ट टर्म डेट सिक्योरिटीज जैसे टर्म डिपॉजिट, सर्टिफिकेट ऑफ डिपॉजिट्स, कमर्शियल पेपर्स इत्यादि में इन्वेस्ट होता है, जिसकी मैच्योरिटी 91 डेज से ऊपर नहीं होती। जब चाहो तब अपना पैसा निकाल सकते हो।
और रिटर्न भी देता है?
बिल्कुल।
तो आज का किस्सा निपट जाए तो सबसे पहला काम यही करूंगा।
और आज के लिए मैं तेरा लिक्विड फंड बन जाता हूँ। दोस्त भी तो लिक्विड फंड की तरह ऐसे ही मौकों पर काम आते हैं।
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
वो काम आपको आज ही करना होगा और उसी तरह आप बहुत कम समय में ढेर सारा धन नहीं जोड़ सकते। उसके लिए लंबे वक्त इंतजार करना ही पड़ेगा।
जी हाँ, इसीलिए इन्वेस्टर अपने गोल्स की लिस्ट बनाकर उन्हें क्लासिफाई कर दे, तो वो अपने गोल्स को ज्यादा जरूरी, कम जरूरी, आज की जरूरत, कल की जरूरत के हिसाब से बांट सकता है। और इसी तरह गलत इन्वेस्टमेंट ऑप्शंस चुनने की जगह इन्वेस्टर अपने फंड्स पहले इम्पोर्टेंट और अर्जेंट गोल्स में लगाएगा और फिर बाकी चीजों में।
ओके, सिनेरियो नंबर 1, आपके दो अहम लाइफ गोल्स देखते हैं। 10 साल में अपना घर और 15 साल बाद बेटे को पढ़ाई के लिए विदेश भेजना। दोनों गोल्स के लिए इन्वेस्टमेंट में स्टेडी ग्रोथ जरूरी है, मतलब ये लॉन्ग टर्म एक्यूमुलेशन गोल्स हैं।
ऐसी सिचुएशन में इन्वेस्टर को इक्विटी स्कीम में इन्वेस्ट करने के बारे में सोचना चाहिए, पर उसके लिए खतरा उठाने का दम चाहिए। डाइवर्सिफाइड इक्विटी फंड्स की लिस्ट से कुछ भी चुना जा सकता है, लार्ज, मिड, स्मॉल कैप या फिर सेक्टर फंड्स। सब कुछ उसकी खतरा उठाने की हिम्मत पर निर्भर करता है। इन्वेस्टर चाहे तो लमसम रकम से शुरुआत कर सकता है या फिर सिस्टमैटिक इन्वेस्टमेंट प्लान से, यानी SIP से।
ठीक है, दूसरा सिनेरियो देखते हैं। आज आपका लकी डे है। आपने अभी अभी एक गेम शो में 5 करोड़ रुपए जीते हैं। ये आंधी अचानक आई है और आपके पास इसे इन्वेस्ट करने का कोई प्लान नहीं है, तो अब आप क्या करेंगे?
अपना पैसा किसी सेविंग्स अकाउंट में रखने की जगह उसे कहाँ इन्वेस्ट करना है, ये तय करने तक अगर आप उसे किसी लिक्विड फंड या शॉर्ट टर्म फंड में इन्वेस्ट करेंगे तो आपको बेहद कम रिस्क पर अच्छे खासे रिटर्न्स मिल सकते हैं।
अब केस नंबर 3, चलिए आपके रिटायरमेंट के वक्त की तरफ चलते हैं। आपने एक कंपनी में 30 साल काम किया, पर आपको पेंशन नहीं मिलने वाली, तो अब आपके पास रेगुलर सेविंग के 75 लाख रुपए हैं और अब आप अपने इन्वेस्टमेंट से रिटायर्ड लाइफ के लिए रेगुलर इनकम कमाना चाहते हैं।
इस मामले में इन्वेस्टर अपने इन्वेस्टमेंट को अलग अलग हिस्सों में बांटकर जरूरत के मुताबिक इन्वेस्ट कर सकता है, जैसे शॉर्ट, मीडियम और लॉन्ग टर्म में। अपनी लंबी जिंदगी को नजर में रखते हुए इन्वेस्टर किसी ऐसे फंड्स में इन्वेस्ट करना चाहेगा जिस पर एक अवधि के बाद इन्फ्लेशन का कोई असर न हो, जैसे लार्ज कैप इक्विटी या बैलेंस फंड्स। एक बड़ा हिस्सा लॉन्ग टर्म बॉन्ड फंड में लगाया जाए ताकि रोजमर्रा के लिए आमदनी पैदा हो।
ऐसी कहानियों का कोई अंत नहीं। जिंदगी गतिशील है और पल पल बदलती है, पर चुनौतियों का सामना करने में ही तो मजा है। तो जिम्मेदारियों और फाइनेंशियल प्रेशर से दबना बंद कर दीजिए। मामला चाहे बच्चों के खिलौनों का हो, उनके हायर एजुकेशन का हो या आपकी रिटायरमेंट का, बस फाइनेंशियली प्लान करना सीखिए। आप गोल्स को अलग करना सीख गए तो आप सही रास्ते पर हैं, या कहें कई रास्तों पर। डिफरेंट इन्वेस्टमेंट ऑब्जेक्टिव्स के लिए कई प्रकार की म्यूचुअल फंड स्कीम्स हैं, यानी आपके अनेक दुखों की एक दवा, म्यूचुअल फंड्स। आशा है आपको वीडियो पसंद आया होगा। देखते रहिए और हम इन्वेस्टिंग कॉन्सेप्ट समझने में आपकी पूरी मदद करेंगे। आप चाहे तो अपनी प्रतिक्रिया हमें editor@templeton.com पर भेज सकते हैं। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना संबंधी सभी दस्तावेजों को सावधानी पूर्वक पढ़ें। SIP या लमसम बेहतर कौन सा है? कुछ चीजें बेहद कंफ्यूजिंग होती हैं और आप बस उन्हें समझ नहीं पाते। सबसे ज्यादा लोग कंफ्यूज्ड होते हैं इन्वेस्ट करने के सबसे अच्छे तरीके को लेकर। हायर रिटर्न सिस्टमैटिकली इन्वेस्ट करने से मिलेंगे या लमसम से? आप भी इस सवाल से गुजर चुके हैं। एक नजरिया ये है, मान लीजिए आप और आपका पड़ोसी दोनों अपने अपने गार्डन में 1 साल के अंतराल में फूल उगाना चाहते हैं। आप दोनों एक साथ मार्केट जाते हैं, पर जहां आप सारे सीड्स एक साथ खरीदकर उन्हें बो देते हैं, आपका दोस्त हर महीने थोड़े थोड़े सीड्स खरीदता है और उन्हें बोता जाता है। सीड्स के प्राइस में पूरे साल कोई बदलाव नहीं होता, तो साल खत्म होने पर किसके गार्डन में फूलों की भरमार ज्यादा होगी?
जाहिर है जिस गार्डन में बीजों को उगने और फलने के लिए पूरे साल भर का मौका मिला, उसी की। पर इस सिनेरियो को अगर प्रैक्टिकल नजर से देखा जाए तो
ठीक है, ये लीजिए। सोचिए आप एक लमसम अमाउंट इन्वेस्ट करते हैं अपने सेविंग्स बैंक अकाउंट में 1,20,000 रुपए का दिसंबर 31 को। दूसरी तरफ आपकी वाइफ हर क्वार्टर इन्वेस्ट करती है 30,000 रुपए। आप दोनों ने इन्वेस्ट करना शुरू किया बैंक डिपॉजिट में जनवरी 1 को। पर जहां आपने इन्वेस्ट किया फिक्स डिपॉजिट में, आपकी वाइफ ने इन्वेस्ट किया रिकरिंग डिपॉजिट में, जो मैच्योर हो जाएगा ठीक 1 साल में। दोनों केसेस में इंटरेस्ट कंपाउंड होता है क्वार्टरली। अब जबकि आप दोनों ने एक सा अमाउंट इन्वेस्ट किया है, 1 साल बाद आपने अपनी वाइफ के मुकाबले लार्जर सम जमा कर लिया होगा। ये सिर्फ इसलिए हुआ क्योंकि जहां आपकी सारी रकम पूरे साल भर इन्वेस्ट रही, वही आपकी पत्नी ने 30,000 रूपए साल भर के लिए, 30,000 9 महीनों के लिए, 30,000 6 महीनों के लिए और 30,000 सिर्फ 3 महीने के लिए इन्वेस्ट किए। इसलिए इन्वेस्टमेंट का एवरेज पीरियड काफी छोटा होने की वजह से वो अपनी रकम पर आपसे कम इंटरेस्ट कमा सकेगी।
देखा आपने, आपकी वाइफ को 9% पर एनम जितना बड़ा इंटरेस्ट रेट मिलता, तब भी उन्हें फायदा नहीं होता। यहाँ तक कि 10% और 11% पर भी वो बराबरी नहीं कर पाती। सिर्फ 12.78% के रेट पर ही दोनों बराबर हो पाते। उनके लिए ये अंतर काफी बड़ा है। इसलिए ये पता चलता है कि इन्वेस्टमेंट्स के विकास के लिए उसे टाइम देना जरूरी है ना?
जरा रुकिए, हर सिक्के के 2 पहलू होते हैं। आपके गार्डन चलते हैं। मान लीजिए दूसरे महीने से सीड्स की कीमतें हर महीने गिरने लगे और साल के अंत तक गिरती रहें। चूँकि आपका पड़ोसी हर महीने एक सी रकम के सीड्स खरीदता है, भाव गिरने पर उसे उसी रकम में अब ज्यादा सीड्स मिलेंगे। अब वो हर महीने बहुत सारे सीड्स बो सकेगा।
वाह, अब साल के अंत में कौन सा गार्डन फूलों से हरा भरा नजर आएगा?
जी बिल्कुल। अब मान लें कि आपने इन्वेस्ट किया अपना प्रिंसिपल एक इक्विटी म्यूचुअल फंड में, जिसका NAV 20 रुपए है, जिससे आपको 6000 यूनिट्स मिली। आपकी पत्नी भी इन्वेस्ट करती है उसी स्कीम में, जिसमें जैन 1 को 1500 यूनिट्स मिलती हैं। अप्रैल 1 को NAV 18 रुपए होने से 1666.67 यूनिट्स, 15 रुपए होने से जुलाई 1 को 2000 यूनिट्स और 17 रुपए होने से अक्टूबर 1 को 1764.71 यूनिट्स मिलती हैं। अब चलते हैं दिसंबर 31 के दिन, जब आपको अपने अकाउंट स्टेटमेंट्स मिलते हैं। 1 साल में 22 रुपए के NAV के भाव से आपके इन्वेस्टमेंट की कीमत बढ़कर 1,32,000 रुपए हो गई है, यानी 10% रिटर्न। पर रुकिए, आपकी पत्नी, जिन्होंने उसी स्कीम में इन्वेस्ट किया था, आपसे कहीं ज्यादा रकम बना बैठी। आपने तो लंबे समय के लिए इन्वेस्ट किया था, फिर ये कैसे हुआ? आसान है। इन्वेस्टमेंट पीरियड के 3 डिफरेंट पॉइंट्स पर आपकी पत्नी आपके साल के शुरुआती NAV के मुकाबले कम NAV पर इन्वेस्ट करने में सफल रही, जिससे उनकी लोअर एवरेज कॉस्ट नीचे आ गई। साल भर में आपकी पत्नी ने खरीदे 6,931.37 यूनिट्स, मुकाबले आपके उन 6,000 यूनिट्स के जो आपने साल की शुरुआत में खरीदे थे। वैसे भी आपका हर यूनिट खरीदने का भाव भी 20 रुपए था, जबकि उसका एवरेज कॉस्ट 1 साल का 17.31 रुपए है। इस कॉन्सेप्ट को रूपी कॉस्ट एवरेजिंग कहते हैं। कुछ समझ आया?
ये कहानी का एक पहलू है। पिछले एग्जाम्पल में इन्वेस्टमेंट पीरियड में NAV लगातार गिरती रही, लेकिन NAV अगर बढ़ने लगे तो कहानी ही बदल जाएगी, है ना? शुरू से लमसम इन्वेस्टर होने की बदौलत इन्वेस्टमेंट्स बेहतरीन प्रदर्शन करेंगे।
इस कहानी का तीसरा एंगल भी है। अगर आपने अक्टूबर 1 को अपने सारे इन्वेस्टमेंट्स विड्रॉ कर लिए तो आपको दिसंबर 31 के मुकाबले हायर NAV मिलेगी। इस तरह आपके इन्वेस्टमेंट की कीमत 1,68,000 रूपए हो जाएगी 1,80,000 रूपए की जगह।
चुनाव करना आसान नहीं है ना? लमसम स्ट्रैटेजीज तब काम करती हैं जब इन्वेस्टर लगातार उठते मार्केट्स में इन्वेस्ट करे। दूसरी तरफ तब हुई सिस्टमैटिक स्ट्रैटेजीज ज्यादा काम आती हैं जब प्राइसेस गिर रहे हों, ताकि लोअर लेवल्स पर इन्वेस्ट करने की अपॉर्चुनिटीज मिले। इन दोनों के बीच डिसाइडिंग फैक्टर होंगे इन्वेस्टमेंट्स की फ्रीक्वेंसी और इन्वेस्टमेंट्स विड्रॉ करने का वक्त।
SIP और लमसम में शान न हो, आप दोनों के डिफरेंस जान गए हैं और बेनिफिट्स भी। कोई भी जवाब सही नहीं है। अपने सभी सीड्स एक साथ या अलग अलग वक्त पर बोने से पहले सिर्फ अपनी सिचुएशन और ऑब्जेक्टिव्स के बारे में सोचिए। दोनों ही तरीकों से आपका गार्डन फूलों से भरा हुआ मिलेगा। आशा है आपको वीडियो पसंद आया होगा। देखते रहिए और हम इन्वेस्टिंग कॉन्सेप्ट समझने में आपकी पूरी मदद करेंगे। आप चाहे तो अपनी प्रतिक्रिया हमें editor@templeton.com पर भेज सकते हैं। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना संबंधी सभी दस्तावेजों को सावधानी पूर्वक पढ़ें। वॉलेटिलिटी को अपना दोस्त बनाएं। हम सभी वॉलेटिलिटी का मतलब जानते हैं। इसका मतलब है कुछ डरावना, कुछ अनप्रेडिक्टेबल। एक इन्वेस्टमेंट को वॉलेटाइल तब कहते हैं जब एक लंबे वक्त तक उसकी कीमतों में उतार चढ़ाव होता रहता है। जितना ज्यादा उतार चढ़ाव उतनी ही ज्यादा वॉलेटिलिटी, और ये काफी रिस्की होता है क्योंकि ये अनिश्चित फ्लक्चुएशंस आपके इन्वेस्टमेंट्स को नेगेटिवली इफेक्ट कर सकते हैं और आप अपनी खून पसीने की कमाई मार्केट की वॉलेटिलिटी के भरोसे नहीं छोड़ना चाहेंगे।
वैसे ये तरीका सही नहीं लगता रिस्क को समझने का। अगर आप रिस्क को इन्वेस्टिंग के संदर्भ में देखें तो वो इन्वेस्टमेंट से मिलने वाले बदलते बढ़ते हुए रिटर्न्स बन जाता है। इससे मतलब काफी हद तक बदल गया है ना?
आपने सही कहा। आमतौर पर रिस्क का मतलब नुकसान होने की संभावना के तौर पर लिया जाता है, जबकि इन्वेस्टिंग के संदर्भ में इसमें अचानक ऊंचाइयां छूने की गुंजाइश भी शामिल हो जाती है।
यही तो होता है वॉलेटिलिटी का मतलब। ये दोनों दिशाओं में काम करती है। ये कीमतों को दोनों दिशाओं में ले जाती है, नीचे और ऊपर। इसके मुकाबले इक्विटीज में इन्वेस्ट करना कहीं ज्यादा रिस्की होता है।
तो इसके दौरान कैसे काम करें, इसे दोस्त बनाकर इसका फायदा कैसे उठाया जाए? अगर आप स्टॉक मार्केट में आने वाले उछाल के बारे में जरा से भी होशियार हैं, तो आप वॉलेटिलिटी को मजबूत हथियार में बदलकर उसे उसी के खिलाफ इस्तेमाल कर सकते हैं। यही वक्त है वॉलेटिलिटी को उसी के खेल में हराने का।
अगर आप नए हैं तो एक बेहद आसान रास्ता है सिस्टमैटिक इन्वेस्टमेंट प्लान, यानी नियमित रूप से इन्वेस्ट करना। SIP में इन्वेस्टर का काम सिर्फ इतना है कि वो नियमित अंतराल में एक बंधी हुई रकम इन्वेस्ट करता रहे। हाँ, सिर्फ इतना ही।
पर इस स्ट्रेटेजी से हम वॉलेटिलिटी को कैसे हरा सकते हैं? मान लीजिए आप हर महीने 5,000 रूपए इन्वेस्ट करते हैं यूनिट्स खरीदने के लिए एक म्यूचुअल फंड स्कीम की। जाहिर है खरीदी जाने वाली नंबर ऑफ यूनिट्स खरीदने के वक्त NAV पर यूनिट की कीमत पर निर्भर होगी। इसलिए अगर NAV पर यूनिट की कीमत 12.5 रूपए है तो आपको 400 यूनिट्स मिलेंगी। पर अगर कीमत 10 रूपए तक गिर गई है तो 500 यूनिट्स मिलेंगी। मतलब आपने मार्केट के वॉलेटिलिटी का फायदा उठा लिया और यूनिट्स को उनके आज के दाम पर खरीद लिया, जो काफी कम भी हो सकता है, पर कभी बहुत ज्यादा भी। तो देखा आपने, वॉलेटिलिटी को हरा दिया। और आप अपनी नियमित इन्वेस्टिंग के अलावा ये काम भी बिना किसी मेहनत के लगातार जारी रख सकते हैं। कीमत गिरने पर ज्यादा खरीदना और कीमत बढ़ने पर कम खरीदना, बिल्कुल वैसे ही जैसे आप मॉल्स में सेल्स लगने पर उसका फायदा उठाते हैं।
दूसरी ओर अगर आपके पास एक लमसम अमाउंट है तो भी आप वॉलेटिलिटी का फायदा उठा सकते हैं सिस्टमैटिक ट्रांसफर प्लान का सहारा लेकर। आप वो लमसम अमाउंट किसी लिक्विड फंड में इन्वेस्ट कर दें और समय समय पर कुछ हिस्सा किसी इक्विटी फंड में डालते रहें। इस तरह आप SIP वाले फायदे भी पा सकेंगे और आपका लमसम आपको ज्यादा मुनाफा देगा।
जी हाँ, आपको अपना लमसम इन्वेस्टमेंट्स किसी भी इक्विटी फंड में नहीं फंसाना, बल्कि एक लिक्विड फंड में इन्वेस्ट करके मैदान में खेलने की ताकत पानी है। ये आपको इन्वेस्ट किए हुए फंड्स के टुकड़ों को रीअलाइन करने की फ्लेक्सिबिलिटी देता है, ताकि अच्छे रिटर्न्स मिले और आप वॉलेटिलिटी को फिर से हरा दें।
समझने वाली बात ये है कि कुछ समय बाद इक्विटी इन्वेस्टमेंट्स के वोलेटाइल मूवमेंट्स थम जाते हैं। इसीलिए लॉन्ग टर्म स्ट्रेटेजी ज्यादा जरूरी है, क्योंकि जब स्टॉक्स ऊपर जाते हैं तो फायदा वॉलेटिलिटी के वक्त खरीदारी करने वाले लॉन्ग टर्म इन्वेस्टर्स को होता है।
याद रखें, नियमित खरीदारी करते वक्त अनुशासित योजना अपनाएं और अगर कीमतें वॉलेटाइल हो जाती हैं तो घबराएं नहीं, क्योंकि राज की बात यह है कि अगर आपने वॉलेटिलिटी से दोस्ती कर ली तो आपका फायदा ही फायदा है। आशा है आपको वीडियो पसंद आया होगा। देखते रहिए और हम इन्वेस्टिंग कॉन्सेप्ट समझने में आपकी पूरी मदद करेंगे। आप चाहे तो अपनी प्रतिक्रिया हमें editor@templeton.com पर भेज सकते हैं। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना संबंधी सभी दस्तावेजों को सावधानी पूर्वक पढ़ें।
Hello friends, the financial year 2015 has been a great year for equity investors. As the country heralds into a new dawn under the new leadership of Prime Minister Modi, and as the macroeconomic factors turn positive, we have also seen decent returns being made by equity investors in Indian equity markets. As we move forward to the new financial year, we move ahead with a lot of optimism as far as the economy as well as the equity markets are concerned. Our three pillars of optimism continue to be very, very dynamic and very vibrant. The first one is the macroeconomic factors turning positive. The second is the non-linear events, which is a fall in the crude prices, as well as a very robust governance, as well as focus on growth led by infrastructure, railways, defense, and so on and so forth. The third pillar is the earnings growth, and though the March quarter earnings are expected to be tepid, we expect in the next 3-4 years earnings to be quite robust. As we move forward, in the near term also, our view is that the markets might continue to show strength. The triggers for the near term obviously are passing of a few important bills which are likely in this month in the session of the parliament. We also expect the earnings upgrade as far as the country is concerned, and we believe that it's a matter of time before India's ratings are improved. And the most important thing, as we mentioned earlier, is the earnings growth. We also believe that the government spending, which was rather timid in the last financial year, should pick up pace as we enter the new financial year. With the fall in the crude prices, as also expectation of a slightly more robust taxation collection, we expect government spending led by infrastructure, railways, roads, defense to pick up meaningfully. This, along with a falling interest rate environment, should ensure that earnings growth trajectory comes back on track. We believe that that would be the biggest trigger as far as the equity markets are concerned. Thus, in short, from an Indian perspective, things look to be quite positive. From a global perspective, things have been a little volatile, especially earlier it was the Russian economy, and there was a wide swing in currencies with euro and British pound depreciating quite sharply. There were also concerns about stray countries here and there, including Greece. However, as we speak, things are starting to stabilize, and our view is that with a very easy liquidity scenario almost in all parts of the world, including Japan, China, Europe and US, money flow into Indian markets, both equity and debt, should continue to be robust. So even from a global perspective, things are looking quite good. In short, our optimism on the Indian economy and the Indian markets continue to be positive, and we would advise investors to continue to look at the Indian equity markets positively. Thank you and wish you a great financial year ahead. Happy investing and look forward to your support as always.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
What is a mutual fund and what are the benefits of investing in a mutual fund? Your financial requirements are likely to grow over time, and even though your income may grow at a steady pace, inflation will take its toll. Traditional forms of investments such as simple bank fixed deposits or investments in gold may not help you realize your dreams and goals. How do you derive the maximum benefit from surplus funds? How will your dream of buying a car, going on a holiday, or buying a house be realized? Mutual funds might be the answer. What is a mutual fund? A mutual fund is a collective investment tool that pools together money from many investors. These funds are then invested by a professional manager in various companies after carrying out considerable research. Mutual funds allow an individual to take part in the stock market without having to monitor its movements on a regular basis. The fund manager takes your money and invests in a wide range of stocks and fixed income investments or debt. With the technique of diversification, it is possible to counter market fluctuations and minimize risk. So, if a particular group of stocks in a portfolio does not do too well at a given time, there is a possibility that the loss is balanced or minimized by better performing stocks in that portfolio. Once invested, you are given units in the fund based on the amount you have invested. These units are easily redeemable, which means that you can liquidate these units simply and quickly. Net asset value or NAV represents the value of one unit of your investment after all fund management fees are paid. NAV multiplied by the number of units gives you the value of your investment. You can invest a lump sum or through a systematic investment plan. In summary, the benefits of investing in a mutual fund are professional investment management, increased diversification, liquidity, ability to participate in investments that may be available only to larger or institutional investors. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
The Indian equity markets have been quite resilient in the recent past, despite concerns such as slowing earnings growth trajectory, likely adverse impact of weak monsoon, and also global issues such as possible exit of Greece from Euro area and also slowing Chinese growth. Despite these concerns, overall markets have fared quite okay, although there were intermittent bouts of volatility during the quarter. This overall performance has been broadly in line with our expectations of a moderate year in terms of equity returns for 2015. Some of the concerns that I mentioned earlier continue to bother market participants even today. For example, on the earnings growth front, while there is going to be some recovery in the first quarter of this financial year, it's unlikely to be in line with the overall earnings expectations that are prevailing in the market. Overall, while the earnings growth for financial 16 are about 16 to 18% year-on-year growth, we believe that overall we may end up with maybe 10 to 12% kind of earnings growth. Secondly, on monsoon, while the monsoon started quite okay and there was above average rainfall for some time, we have recently encountered dry spell across India. So it remains to be seen whether overall monsoons will be affecting our economic growth, especially the rural income. We need to get a better hang of this, and this will be available only towards end of August or maybe by September. And also on the global issues such as Greece or China, there seems to be no immediate solution in sight, and these issues will continue to bother market participants. Added to that, you also have monsoon session of Parliament starting from 3rd week of July, where some of the key bills will be taken up for legislation, and depending on the direction of some of these key issues, the market will find its direction. The volatility that may be there in the short term could be an opportunity for investors to increase equity allocation. While financial year 16 could be a subdued year in terms of earnings growth, we believe that from 17 onwards, the earnings growth momentum will really pick up. We believe that this is going to be aided by supportive government policies, lower interest rates, and also economic recovery that's likely to happen. Overall, we believe that anybody who is investing in the next 6 months will actually gain from the wealth creation from financial year 17 and beyond. So it's a right opportunity to use this volatility and get invested in equity markets. From our product basket, we believe that for conservative investors, Kotak 50 could be an option. For all those investors who are regularly investing in equities and want a diversified exposure, either Kotak Select Focus or Kotak Opportunities could be good options. And for those aggressive investors who are looking for mid-cap allocation, Kotak Emerging Equity is an option.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Hello everyone. Let me begin with the month gone by, the month of June. To begin with the good news first, a couple of things which happened in the month of June. We saw a rate cut of 25 basis points on 2nd of June. Secondly, we also saw more than anticipated better monsoons, contrary to the street expectation of a below normal monsoon. Also, the not so good things for the month of June largely were the heightened volatility that we saw in the fixed income markets. So on the day of the policy, yields which were hovering at about 7.65 levels actually inched up 25 to 30 basis points through the month, and approximately 20 to 25 basis points kind of volatility on either ways were experienced across the month of June. Now, what really triggered the reason? A couple of things. Firstly, the good news of the rate cut on 2nd of June was not really good news for the markets, largely because of the not so perceived dovish statement by the Reserve Banker, where the expectation was that the markets were led to believe that the central bank has gone on an extended or maybe a permanent sort of a pause on the rate easing front. So that obviously led to some dissatisfaction and a sell-off in the market. Secondly, the uncertainty brewing around the Greece front, which was due to make payment to the IMF, that again was a question mark. So we saw all-round volatility.
The financial advisory business is rapidly evolving from offering just sales-based advice to advice-based sales of financial products. Advice that ensures customers can avail of better performing financial products that offer higher returns and enhanced security. This advice that empowers financial advisors to offer quality services is based on an understanding of numerous factors that influence the performance of financial products. Understanding that is gathered through a deeper understanding and solid analytics. Ifan, shaping tomorrow's financial planners. Independent Financial Associates Network, Ifan, is a B2B distribution platform for financial products that supports its associates to enhance their advisory and client services with the help of innovative technology and unbiased research. Established in 2005, Ifan possesses over 75 years of combined work experience in the financial industry. Ifan was founded with a vision to establish itself as a reliable partner for business growth and higher profitability that empowers financial advisors in India with a comprehensive range of investment products and services by being a one point of contact for all financial product and asset classes. Ifan offers a web-based B2B financial products and services platform where financial advisors and distributors can gain access to services like basket of products, research, financial planning, e-Nivesh, online wrap solutions, portfolio monitoring, CRM, commission management, training, financial planning, and trailer monitoring. It serves as an efficient, low-cost, plug-and-play model for advisors to scale up their business in a standardized manner. Ifan also offers professional back-office services for product research, marketing, and legal and compliance. Ifan provides efficient online access to its clients, enabling them to monitor all investments under one roof. Manufacturers can access Ifan's widespread professional associate network across the country. The greatest benefit that an associate of Ifan would hold is with Ifan's assistance, he would be in a position to grow his business both in quality and quantity. Ifan's research-based B2B platform offers various asset classes, covering mutual funds, debt, equity, real estate, home loan, LAP, and LAS to over 50,000 clients through a 1,000 plus dedicated associates network in 87 cities in India. The company has been ranked in top 50 distributors in India amongst over 90,000 distributors in mutual fund. Ifan also ranks amongst the top 5 distributors in company fixed deposit mobilization. Being a large institute and aggregator has an advantage to negotiate with financial product providers and thus offer higher short-term and long revenue to its associates. This also helps associates sustain their skilled manpower, thereby helping them increase their client base. As an associate starts increasing his network, he will have the potential to earn higher revenues across product classes. Ifan partners include a company that enables IFAs to gain greater efficiency and the ability to tap into economies of scale and at the same time help them deliver better service performance for their clients without increasing the cost. Ifan has taken the initiative to lead the change and facilitate a paradigm shift from the current sales-based advice to a more effective, advice-based sales model in the financial services sector. Ifan.
Even in the global yields, anywhere in the range of 50 to 75 basis points. Nevertheless, the dust seems to have settled right now. Our take is that the Greece news is largely into the prices, and more specifically, Greece is a very insignificant portion of the entire Eurozone, less than 2%. So we do not perceive any direct impact on India as a country, as a region, both on the capital markets as also on the fixed income markets. What should the investors do right now? We believe that the yields heading towards the rightmost band, the 10-year benchmark, on the run benchmark yield is close to about 7.85%, and the old or the erstwhile 10-year benchmark is already trading above the 8% region. The rest of the yield curve on the sovereign side is anywhere in the band of 8.1 to 8.15. We believe that these are extremely, I would say, opportunistic buys to gain exposure on the duration front. To that extent, we remain constructive on the bond and the gilt story and would recommend investors to stay put in duration funds or possibly increase allocations at the current levels. The reasons why we believe that the duration story will pan out is because we expect the Reserve Bank to ease rates probably by another 25 basis points before the end of financial year 2016, and probably for the remainder of calendar 2016, maybe another 50 basis points, but that would largely be contingent on the way inflation pans out. We do not expect monsoons to play significant havoc on the inflation at the current juncture, largely because of the past history of the current government being able to manage the food side supply if there were to be a below deficient or below normal monsoons. So with that, we believe that the outlook for interest rates continue to remain favorable. The shorter end of the yield curve is also reasonably well supported because of the fact that there is reasonably comfortable liquidity in the system. We expect this scenario to continue into the near future as well. The month of June also saw advance tax outflows which did not dent the shorter end of the yield curve, vindicating our stance that the current yield curve remains attractive as also supportive. What are the strategies that investors could look at the current juncture? Well, as I said, the duration pack continues to remain attractive, especially in the light of the recent 25 basis sell-off. So one could look at allocations to Kotak Gilt and Kotak Bond kind of strategies. We reiterate, for those investors who do not like or would not want to withstand such kind of volatilities, the short-term space with a higher accrual like Kotak Income Opportunities and Kotak Medium Term do make imminent sense. To conclude, we want to reiterate that volatility is something which is an inherent part of every asset class. One should not really shy away from it, but rather look to participate in the anticipation of making profits going forward. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Hello friends. As part of our continuous endeavor to be closer to our investors in order to share our market views on a real-time basis, we have started with a series of interactions that we will have with you on a monthly basis. As part of the first series, I will be sharing the debt views, broadly the views that we have for the financial year FY16. We have seen a meaningful reduction in rates across various tenors of around 100 to 125 basis points in the last 1 year. The fall in rates that we have seen in the last 1 year was obviously aided by a lowering of inflation and inflationary expectations, a lowering of the current account deficit numbers, sharp disinflationary forces that we saw in terms of commodity prices, as well as the fact that government's adherence to fiscal discipline has driven a lot of comfort in this system, both from an inflationary expectation perspective as well as from a RBI monetary management perspective. As a result, we have seen the Reserve Bank of India already having cut rates twice over since January of this calendar year. We do expect the Reserve Bank of India to cut rates by an additional 50 basis points in the next 6 to 9 months. This will be broadly aided by two primary reasons. One, we will continue to see these disinflationary pressures continue. As the government pursues on its path of fiscal consolidation, a lot of expenditure essentially that we have seen in the earlier years will be rationalized, subsidies will be better targeted, and we will also see a lot more supply side responses from the government in terms of tackling inflation. And second, we are going to continue to see globally disinflationary pressures as far as commodity prices are concerned. So both from an inflation perspective as well as from a fiscal discipline perspective, we believe that the RBI will have the required comfort that will open up space for at least 50 basis points of further rate cuts from here on. What will aid the transmission of these rate cuts into the economy is also the significantly improved liquidity conditions that we see right now. Over the last 12 to 18 months, liquidity conditions in the system have improved significantly because of continued healthy FX flows, because of reducing pressures from currency in circulation, and also because we are seeing an improvement in financial savings. As we go along, we will continue to see a robust FX inflow environment, and also the fact that the government on its path of fiscal consolidation will also ensure that there is an impetus, or there is a support provided to financial savings. Now that is the reason why we will see liquidity conditions improving. So better liquidity conditions along with a rate cut environment will essentially not only mean that yields come down, but also that the curve starts to bull steepen. And a bullish steepening of the yield curve has ramifications for products across the yield curve. From a Reliance Mutual Fund perspective, we believe that this is going to help in terms of performance of not only long duration products like the dynamic bond fund and the income fund, but we also think that it may help in terms of performance of intermediate duration products much more. For example, products like the short term bond fund, the ultra short term funds, as well as the corporate bond fund, vis-a-vis what we have seen in the last 12 to 24 months. Hence, we think that investors who are looking at various options of investments into debt products, depending on their risk return profile and depending on their investment tenors, can decide between these intermediate duration products as well as long duration products like the dynamic bond fund for investments that will most likely deliver good returns over the next 12 to 24 months. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
What are tax saving schemes? These are schemes that help an investor save on taxes. Tax saving schemes offer tax rebates to the investors under specific provisions of the Income Tax Act 1961, as the government offers tax incentives for investment in specified avenues. These schemes are also known as equity-linked saving schemes or ELSS. The investment in these schemes has to stay for a minimum period of 3 years from the date of investment. These schemes are growth-oriented and invest predominantly in equities. The growth opportunities and risks associated with these schemes are like those of any equity-oriented scheme. Mutual fund investments are subject to market risks. Read all scheme-related documents and information carefully before investing.
Life is a roller coaster ride, full of ups and downs. Well, we all know that we have to save for retirement, children's education, family obligations, medical emergencies, travel. All the responsibilities and desires that life brings with it. But the truth is, no matter how much you save, it's never enough. Have you ever tried beating a treadmill while running on it? It invariably stays in front of you. Inflation is like a treadmill. If the rate of inflation on an average over the long term is greater than the return on your investment, then you will have lost the race before it even started. And as time passes by, the gap between your investment growth and cost increase due to inflation will only widen. If you still don't believe in the power of inflation, take a look at these numbers. Let's assume an average 5% rate of inflation over different time periods. For example, if you take a look at your monthly expenses currently, say they're about Rs 20,000. After 25 years, it will be above 67,000 rupees. If you want to send your child for higher education today, it would cost you about 5 lakh rupees. But after 15 years, it will be above 10 lakh rupees. If you want to marry your child today, it will cost you about 10 lakh. But after 20 years, it will be above 26 lakh rupees. So, if you want your investment returns to win the race against inflation, you need to choose an investment option that has the potential to perform with some momentum over a long period of time. How do you beat inflation? All you need is an investment vehicle which has the potential to deliver returns which are substantially higher than inflation over a long period of time. Did you know? Indian equity markets have given an average return of 17.73% since inception. An equity mutual fund scheme with a long-term track record and consistent performance, such as DSP BlackRock Top 100 Equity Fund or DSP BlackRock Equity Fund, could potentially be that vehicle which helps you comfortably stay ahead of inflation over time. Experience may have taught you that tasks done in a planned, disciplined, and systematic manner always deliver the best results in the long term. Well, wealth creation requires pretty much the same principles. It's all about systematic investment planning and maintaining that disciplined approach till you achieve your desired result. Use the power of compounding to your advantage. If you save a small sum of money regularly in an equity mutual fund, your money will work with greater power and it will significantly impact your wealth accumulation. That's the underlying principle of the power of compounding. But you need to start now. Even a seemingly small delay of 5 years can cost you the crorepati tag. Let me illustrate how. If you make a monthly investment of Rs 5,000 for a period of 15 years, you will have invested the sum of 9 lakh rupees. At an annualized return of 18% per annum, this 9 lakh will have grown to 45.96 lakh. Let's look at another scenario. If you invested the same 5,000 rupees every month over a period of 20 years, you will have invested a sum of Rs 12 lakh. At an annualized return of 18% per annum, this 12 lakh would have grown to, guess what? Rupees 1.17 crore. Therefore, that extra 5 years of investment has more than doubled your final corpus. Starting a SIP in an equity mutual fund allows you to take advantage of investing in equities and also seek diversification. In addition, it minimizes the effects of investing in volatile markets. You don't even have to worry about when and where to invest or even track daily market movements, as there is a professional fund manager taking care of your investments. Systematic investing significantly reduces the risks attached to market timing. Step 1. Select a mutual fund scheme of your choice from the basket of equity schemes available with DSP BlackRock Mutual Fund. Step 2. Select the monthly investment amount. Step 3. Decide the investment period. That is to say, for how long do you wish to invest on a regular basis? We recommend that for an investor to benefit from the power of compounding, you need to select a longer time period. For example, if you are starting a SIP to build a retirement corpus, you should select a period which is equal to the number of years that are left before you retire. Step 4. Decide on the frequency. That is to say, do you wish to opt for a monthly or quarterly SIP option? We recommend a monthly option. As if the power of compounding wasn't enough, investing with the help of SIPs also offers you the additional benefit of rupee cost averaging. Simply put, you buy more units at lower prices and less units at higher prices without having to track the market every day. So how does rupee cost averaging work? This is how. The amount you invest gets converted into units depending on the net asset value of the scheme you have invested in. NAV is the market value per unit of a fund. If the NAV in the first month is Rs 20 and you have invested Rs 2,000, you will get 100 units. Similarly, in the next month, if the NAV is Rs 25, you will get 80 units. The following month, if the NAV is rupees 18, then you will get 111 units. So, after 3 months, you would have 291 units. This means that investing through SIP helped you pay a lower price per unit. On an average, you would have paid only around rupees 20.61 per unit. The units get accumulated over a period of time. You can stay invested till the time you wish and redeem your units when you exit from the scheme. The units are redeemed at the applicable NAV and you get back your money with returns. You can also opt for a systematic transfer plan. Make a lump sum investment into one of our income funds along with instructions to transfer a fixed sum on a specific date into an equity scheme of your choice. All it requires is a one-time instruction on your part, which will be followed till such a time that the lump sum investment within your income scheme has been depleted, or you have instructed us to switch your investments into another equity scheme from within our basket of schemes. You can download our SIP calculator on your mobile phone. Just SMS SIP to 922 317 9333. You can also follow us on Facebook to get regular updates on DSP BlackRock mutual funds. Thank you for spending this time with us. We hope that you've enjoyed our presentation that's helped you understand systematic investment planning a bit better. Have a great day and happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents and information carefully before investing.
Why should we invest in mutual funds? We all save money. But then, a question comes to our mind. What do I do with the money? How can I get the maximum benefit out of it? After all, we worked really hard for it. We ask our friends and colleagues about where to invest. Well, some will say fixed deposits. Some say buy an insurance policy. But are these the best options we have? You see, with price rises and inflation touching the roof, how will your dreams like buying a car or going on a holiday ever become a reality? Mutual funds, trust me, is the answer. Now you see, when we hear about this mutual funds, it sounds very complicated. We think about filling forms, reading boring bank brochures, going through complex calculations, stock markets. It is simply not everyone's cup of tea. That is where mutual fund experts come in. Like most investors, you may have more interesting things to do in life, like, say, going to a movie or a weekend trip. So leaving investments to the experts is a practical and logical idea. After all, they are the experts. Now you may ask, what are the benefits of mutual funds? Mutual funds offer the convenience of liquidity. This means that you can get access to your money very easily and at short notice. All it takes is a phone call. It is almost like keeping your money in your existing bank account. The only difference, your money has a better chance to grow in a mutual fund. Mutual funds provide the right diversification for your investments. It is a given that stock markets have ups and downs. There is no escape from that fact. To reduce this imminent risk, the asset management company does a very smart thing. They go and invest in not one, but various industries in equity and various securities in debt funds. Mutual funds are well regulated by SEBI, which means that it is always under the hawk eye of SEBI. So there's very less chance of fraud. People think that mutual funds are for those who make a lot of money. This is just a myth. There are mutual fund investments for the junior-most guy in the office to the big entrepreneur. So no matter how much you earn or what your risk appetite is, there is a plan for all of us. You could invest in low-risk products like cash and liquid funds, which have potentially steady returns. Or invest in high-risk products with potentially high returns. For your short-term goals like a foreign holiday or a car, there are debt funds. For long-term goals like your own house or a daughter's marriage, there are equity funds. So you have a wide range of investment choices. So now you may say, this is a great idea, but what about the charges? I mean, they are mutual fund experts. The good news is that the charges are very low. Since a professional is managing a large pool of investors like you, the cost that you pay for a professional manager is shared and very small compared to the other investment options in the market. On top of getting good returns for your money, you can also avail long-term tax benefits. This is one of the greatest benefits of this investment. So in all, easy liquidity, diversification, regulated by SEBI, mutual fund for everyone, wide investment choices, low charges, long-term tax benefit. All these factors make mutual fund a very practical investment you should seriously consider. It is the stepping stone to your dream. So set your goals and start investing today. You are much closer to your dream than you think. To invest in mutual funds, call your financial advisor now.
The mathematician invented the game of chess. When he showed it to the king, the ruler was so pleased that he gave the inventor the right to name his prize for the invention. The man, who was very wise, asked the king, "Your Highness, if you place just 1 grain of rice on the first square of this chessboard and double it for every square, I will consider myself well rewarded." "Are you sure?" asked the king, greatly surprised. "Just grains of rice, not gold?" "Yes, Your Highness," affirmed. Investments are subject to market risks. Read all scheme-related documents carefully.
The financial advisory business is rapidly evolving from offering just sales-based advice to advice-based sales of financial products. Advice that ensures customers can avail of better performing financial products that offer higher returns and enhanced security. This advice that empowers financial advisors to offer quality services is based on an understanding of numerous factors that influence the performance of financial products. Understanding that is gathered through a deeper understanding and solid analytics. Ifan, shaping tomorrow's financial planners. Independent Financial Associates Network, Ifan, is a B2B distribution platform for financial products that supports its associates to enhance their advisory and client services with the help of innovative technology and unbiased research. Established in 2005, Ifan possesses over 75 years of combined work experience in the financial industry. Ifan was founded with a vision to establish itself as a reliable partner for business growth and higher profitability that empowers financial advisors in India with a comprehensive range of investment products and services by being a one point of contact for all financial product and asset classes. Ifan offers a web-based B2B financial products and services platform where financial advisors and distributors can gain access to services like basket of products, research, financial planning, e-Nivesh, online wrap solutions, portfolio monitoring, CRM, commission management, training, financial planning, and trailer monitoring. It serves as an efficient, low-cost, plug-and-play model for advisors to scale up their business in a standardized manner. Ifan also offers professional back-office services for product research, marketing, and legal and compliance. Ifan provides efficient online access to its clients, enabling them to monitor all investments under one roof. Manufacturers can access Ifan's widespread professional associate network across the country. The greatest benefit that an associate of Ifan would hold is with Ifan's assistance, he would be in a position to grow his business both in quality and quantity. Ifan's research-based B2B platform offers various asset classes, covering mutual funds, debt, equity, real estate, home loan, LAP, and LAS. to over 50,000 clients through a 1,000 plus dedicated associates network in 87 cities in India. The company has been ranked in top 50 distributors in India amongst over 90,000 distributors in mutual fund. Ifan also ranks amongst the top 5 distributors in company fixed deposit mobilization. Being a large institute and aggregator has an advantage to negotiate with financial product providers and thus offer higher short-term and long revenue to its associates. This also helps associates sustain their skilled manpower, thereby helping them increase their client base. As an associate starts increasing his network, he will have the potential to earn higher revenues across product classes. Ifan partners include a company that enables IFAs to gain greater efficiency and the ability to tap into economies of scale and at the same time help them deliver better service performance for their clients without increasing the cost. Ifan has taken the initiative to lead the change and facilitate a paradigm shift from the current sales-based advice to a more effective advice-based sales model in the financial services sector. Ifan.
टिंटू, अलमारी के ऊपर से ब्राउन वाला बैग निकाल दो।
ये तो बहुत ऊंचा है। मुझे ये क्यों बोलते हैं जबकि पता है कि मैं छोटा हूँ। मैं ही क्यों फंसता हूँ ऐसे चक्करों में।
बैग निकाला क्या?
पापा ये सही किया, ये लैडर सही है।
चिंटू के लिए बैग निकालना उतना मुश्किल नहीं था जितना वो सोच रहा था। थोड़ी समझदारी एंड छोटे छोटे स्टेप्स आपको मंजिल तक पहुंचा देते हैं। कहते हैं ना, द जर्नी ऑफ 1000 माइल्स बिगिंस विद वन सिंगल स्टेप। इसी तरह SIP के जरिए छोटे छोटे स्टेप्स लेकर फाइनेंशियल गोल्स अचीव किए जा सकते हैं। SIP मतलब सिस्टमैटिक इन्वेस्टमेंट प्लान। एक बार SIP रजिस्टर करने से हर महीने आपके बैंक अकाउंट से फिक्स डेट को फिक्स अमाउंट म्यूचुअल फंड में इन्वेस्ट होता जाता है। इससे डिसिप्लिन वे में आपका इन्वेस्टमेंट तो होता ही है। क्योंकि ये इन्वेस्टमेंट मार्केट लिंक्ड होती है, इसलिए मार्केट के उतार चढ़ाव के बीच आपका इन्वेस्टमेंट एक एवरेज कॉस्ट पर होता है। तो अब बड़े सपने देखो, चाहे छोटे स्टेप्स लो, शुरू तो करो।
पापा, बड़ी वाली अलमारी के ऊपर से मेरे गर्म कपड़े निकालने हैं और लंबी लैडर लगेगी।
हाँ, उसका भी इंतजाम है। ओ, आओ बड़ी सीढ़ी लगाते हैं।
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
There once was a poet who fell upon such hard times that he was no longer able to feed his family. So he decided to set out for the palace and appeal to the generosity of the king. Upon being summoned by the king, he started reciting his poems.
Wow.
The king, well pleased, asked him to name his reward. Pointing to the finely wrought chessboard, the poet said, "Your Highness, if you place just 1 grain of rice in the first square and double it for every square, I will consider myself well rewarded." "Are you sure?" asked the king. "Just grains of rice and not gold?" "Yes, Your Highness." "So it shall be." So the courtiers started placing the grains of rice. 1 on the first square, 2 on the second, 4 on the third, 8 on the fourth square, and so on. By the time they came to the 10th square, they had to place 512 grains of rice. By the 20th square, the number swelled to 5,24,288. When they came to the halfway mark, the 32nd square, the grain count was 214 crores, 74 lakhs, 83,648. Soon the count increased to lakhs of crores. Eventually, the hapless king had to hand over his entire kingdom to the clever poet. And it all began with one grain of rice. Moral of the story? Never underestimate the power of compounding. If you systematically invest a small sum every month, your SIP can grow to a very impressive sum when you retire. Sundaram Mutual, unearthing opportunities. Mutual fund investments are subject to market risks. Please read the statement of additional information and the scheme information document carefully before investing.
What is a mutual fund? The word mutual implies a group of people coming together, and funds means pooling of money. Therefore, the term mutual funds suggests a group of people putting their money together to buy stocks and bonds, or in some cases, a combination of both. Or think of it like this. A baker bakes a £1 million cake. The cake is made up of a variety of ingredients. Each ingredient is an individual stock or bond. The list of these ingredients makes up your portfolio. This fund is managed by a professional fund manager who manages this pool of money and builds a portfolio which is in line with the investment objective of the scheme. Investments are spread across a wide cross-section of industries and sectors. This ensures that risk is controlled because all stocks may not move in the same direction in the same proportion at the same time. Thus, it helps balance things out. What are mutual fund units and how is their NAV calculated? Mutual funds issue units to the investors in accordance with the quantum of money invested by them. Investors in mutual funds are commonly known as unit holders. When an investor invests money in any scheme, he or she is allocated units. The value of each unit is called NAV. It's reflective of the current market value of a single unit of the fund's holdings. When investors invest in the fund, they buy units of the fund at its NAV price. Let's go back to the baker and the cake. To make the cake affordable, the baker cuts the cake into many pieces and sells it by the piece. Each piece comes at a price. In accordance with the amount you pay, a proportionate amount of the cake is then owned by you. The number of units that an investor can buy depends upon two factors: the NAV of each unit and the total amount of investment. Hence, the NAV per unit of a scheme is the market value of securities less total recurring expenses of the scheme divided by the total number of units of the scheme on any particular date. So, if the NAV is 15 rupees and the investor invests 15,000 rupees in the scheme, then he or she will be allotted 1,000 units. So basically, net asset value is the current market value of one unit of the scheme. Take a piece of cake for example. Each piece of cake includes all the ingredients in various amounts. Each ingredient has a market value. The combined market value of all the ingredients in the cake contributes to calculating the NAV of the cake. However, it must be noted that this value keeps changing every day. Since market value of securities changes every day, NAV of a scheme also varies on a day-to-day basis. Mutual fund investments are subject to market risks. Read all scheme-related documents and information carefully before investing. How convenient is it to invest in a mutual fund scheme? Investors can contact their financial advisor for necessary information and application forms. Forms can be deposited at the collection centers through the distributors who provide such services. Investors can also visit the AMC's sales office, registrars and transfer agents or investor service centers and deposit duly filled application forms. Most AMCs today also offer an online transaction platform which enables investors to complete their investment on the internet without any physical application forms. Investors should note that there are cut-off times for transacting in any mutual fund scheme, and the applicable NAV is dependent on the time at which the transaction is recorded. For example, if on January 1st you invest in DSP BlackRock Equity Fund and submit the application form before 3 p.m., which is the cut-off time for DSP BlackRock Equity Fund, the applicable NAV will be as of January 1st. If, however, this transaction is recorded after 3 p.m., the applicable NAV will be that of January 2nd. Mutual fund investments are subject to market risks. Read all scheme-related documents and information carefully before investing. What are the different types of mutual fund schemes? There are several ways to categorize mutual fund schemes. Let's check out a few of them. First of all, schemes can either be classified as open-ended schemes or close-ended schemes. What is an open-ended fund or scheme? An open-ended fund or scheme means that it's open for business on all business days. You can invest or withdraw your money on all business days. Liquidity is the key feature of open-ended schemes. And what are close-ended funds or schemes? Close-ended funds or schemes have a stipulated maturity period, example 3 months, 6 months, a year or more. Unlike the open-ended funds that's open for business on all business days, close-ended funds are open for purchase only during the initial launch and for redemption at specified periods of time, either immediately post-launch or later, depending on when the AMC specifies. Mutual fund schemes can be classified according to the investment objective. Such schemes may be open-ended or close-ended schemes, as described earlier. Let's take a look at some variations. Equity funds. The aim of growth funds is to provide capital appreciation over a medium to long-term period. These funds invest in equity shares of companies and therefore offer the investor the potential for growth. Such schemes invest a major amount in equities. Equity schemes are suitable for investors having a long-term outlook, seeking appreciation over a period of time. Balanced funds. The aim of balanced funds is to provide the benefits of investing in both equities as well as debt securities in the proportion indicated in their offer documents. These are appropriate for those investors who are looking for growth without taking too much risk. These funds are also affected because of fluctuations in share prices in the stock markets. However, NAVs of such funds are likely to be less volatile compared to pure equity funds. Index funds replicate the portfolio of a particular market index, such as the BSE Sensex, S&P Nifty, etc. This makes tracking your investments simple and easy to understand. NAVs of such schemes would rise or fall in accordance with the rise or fall in the index, though not exactly by the same percentage due to some factors known as tracking error in technical terms. Necessary disclosures in this regard are made in the offer document of the mutual fund scheme. Income or bond funds. Income funds invest in debt securities such as bonds, corporate debentures, government securities, and money market instruments. Such funds are less risky compared to equity schemes. These funds are not affected by fluctuations in the equity markets. However, opportunities of capital appreciation are also limited in such funds. Income funds are generally preferred by individuals with a low risk profile. Money market or liquid fund. These funds are also income funds and their aim is to provide easy liquidity, preservation of capital, and moderate income. These schemes invest exclusively in safer short-term instruments such as treasury bills, certificates of deposit, commercial paper and CBLO, government securities, etc. Returns on these schemes do not fluctuate much compared to other funds. These funds are appropriate for corporate and individual investors as a means to park their surplus funds for short periods of time. Gilt funds. These funds invest exclusively in government securities. Government securities have no default risk. NAVs of these schemes also fluctuate due to interest rates and other economic factors, as is the case with income or debt-oriented schemes. Mutual fund investments are subject to market risks. Read all scheme-related documents and information carefully before investing.
Like to throw a slightly different perspective before we get started, and maybe Manish, you could kind of help me on this. Is you have spoken about digitization to creditization in one of the pieces you did for us, and data playing a big role in how this can happen, or probabilities that you shared there. How much do you think this entire process of digital money coming in will help in evaluating a person's credit and getting the credit business going on?
The short answer is it'll help, but the ways in which it'll evolve is difficult to predict at this point. So this is a first step forward. So let me just elaborate a bit. So digitization starts creating an information footprint, right, about customers. But as you go forward, the reason why digital transformations or disruptions happen is multiple things, right? Broadly, there are three things that drive it. One of them tends to be very simple, it's cost, right? The second is speed, right? And the third is data. By and large, data and insights tends to be the biggest, right? But I would say cost and speed tend to be one of the biggest amongst the other two big enablers. Now, if you just elaborate on how much this first step forward is going to help in all these three directions, it will help, right? I mean, does it create enough data, enough of a data footprint where I start understanding the customer better? It's difficult to say, you know. I mean, it's a very asymmetric, a very patchy use of data footprint that gets created. And that's not to say that I don't get to know more. It's just that what I get to know is not that usable at this point, right? Now, secondly, cost. I mean, it's a fact. You know, when you start moving some of these transactions online, see, at this point, I think someone used the word, used the number about 150, 170 basis points for every transaction. That's very accurate, actually. It costs about that much to do a digital transaction. But some of the new trends that I'm seeing at the moment, they're shrinking some of the transactions costs down to about 40, 50 basis points. So the cost benefit is also coming, right? And that leaves us with the third, which is speed. I think ultimately speed will absolutely happen. Again, to what extent it's going to help and move it forward, it's again difficult to tell, you know. To the extent you're taking decisions, you get all the data available with you, you know, speed is enabled. But there's always that last bit of decision that's needed, you know, and anyone who wants to sort of, you know, take a mortgage, you know, would experience this. All that's happened is, instead of 10% of the things happening fast, 60% of the things happen fast. But that remaining 40% still needs to be completed. So, you know, it doesn't sound wildly optimistic when I say too early to tell, but that's, in my opinion, the fact at the moment.
I'll kind of put this as a context of, I was interacting with some data scientists, and one of these gentlemen works with a very leading bank, private sector bank, and his point was becomes very difficult for us to explain to them that the kind of data that you're collating and expecting us data scientists to throw up something which is interesting, which is what, or you're looking for some new ways that you can enhance the service or experience. But effectively every day the goalpost is changing as much as the goal itself is changing. So I'm sure all of you experience, or in some way are kind of in that situation today, that there is too much of information flow either from the consumer, which you already have, or data which is available otherwise, which you're kind of consuming and trying to either develop products or improve services. So how do you grapple with something like this, Mohit, if you could?
Okay, I think it's a problem of plenty.
Exactly.
So I think in our category, I represent a life insurance company. I think the fundamental of life insurance is to understand data, right? And data pertaining to how lives perform over a period of time, how our customer bases have performed. I think data is very, very important, but if life insurance whether life insurance has evolved in terms of using data and using high-end predictive techniques to be able to extrapolate future projections and create new market segments, etc., I think there is a long way to go. So we are looking at data in bite size. So we look at data separately when it comes to serving our customers. So existing customers form a large part of our portfolio. Possibly 2/3 of our annual premium income is aligned to existing customers because they keep paying their annual premiums. So we analyze data and we use that data to our advantage to be able to win back customers, because life insurance also suffers this problem of people signing up new contracts but not continuing the long-term relationship. They end up exiting for whatever reasons, second year, third year onwards. So we use data intelligently in that sense to be able to slice it into smaller bites and then go after the bases and win them back. I think that's the large application. The other area where we have started implementing data, and I would not say it's data, but it's more consumer behavior, is in the social space. So being a marketer myself and a big believer in digital, so at Excite Life we are studying what consumers are actually, how consumers are behaving on the social space. And social here is not only about Facebook and Twitter, it's the overall internet where they are having conversations and they are stating their problems, they are seeking solutions, they are sharing their views. So we are actually now listening to all of that information, and we are bucketing them, and we are trying to create actions which are essentially actions towards engaging with those people and create new conversations with them so that they can look at our organization, our brand, for a potential service that they need to look at. So I think that's where our play on data is for now.
Would you like to share something on this?
A panel on digital always makes us feel, I represent a health insurance company, always makes us feel that we are still in the nascent stage and there's a lot to be done. And a health insurance business at this point of time, more than 80% depends on eye-to-eye contact in India. But actually we foresee a very great future in the underwriting front, in the marketing front, and in the submission of claims. Because as we facilitate the service of claims by digital means, I think insurance can penetrate in a very big way. And this is the era of saving electronic health records. We talk about digitization in hospitals, electronic health records, but this is seen only in the metros. Mm-hmm. For example, we have around 8,000 plus hospitals networked with us. 2/3 of them are novice in this area, and very difficult for us to insist on a discharge summary which is electronically generated. So they because our services depends on the competence of the digital competence of the service providers, I mean the hospitals. So in the health insurance front, it is increasing, online businesses are growing, but still it is in single digit, the contribution is single digit. Maximum business generation or on the service front, still I was talking to my regional head this morning. A company of our size, we are spending more than 100 crores on stationaries, which most of it can be avoided if on the service front also, like, we get customers who upload their documents and send to us digitally, and we can process. Actually, we are moving into a paperless transaction, but still, now what happens? The customer submits everything in big bulks and papers. We upload all of them, and then we do digitally, and then we save these documents in our godown or whatever it is, according to the regulator compliance. So these things are like, makes us feel that we should have more acumen on digitization, because it's going to help us in analytics in a big way. Unless we start doing the digital analysis and innovating newer products, health insurance cannot penetrate. So for analytics, and number two, as he said, engaging the customers, 90% of our customers, we feel that they should renew with us, and we have a renewal retention of around 90%. And to achieve this on a long-term basis, we need to constantly engage our customers. So engaging our customers who are healthy otherwise, who have a health insurance policy, but they have not utilized it so far. So, and promoting wellness on these customers, we depend on digital for this, we have a customer base of around 68.23 lakhs. And engaging these customers, we need to look at digital means, and retrieving the data, electronic data of these customers, and maintaining an electronic health record. And then, like, trying to give outpatient. Now the industry is looking at a comprehensive coverage, but for outpatient care today, people have to go all the way, fix an appointment, visit a doctor, and this can